All right, what is going on, you guys? This is going to be an in-depth tutorial on how to trade this new strategy that has earned me over 700 points worth of profit in the last 7 trading days alone. I had my best day and my best week ever with this strategy. I've been trading it for a little bit under a month now, and I am having the highest win rate that I have ever had out of any strategy. So I know Habibi made a video on this, but since then there was a lot of questions that have been kind of floating around since then. So I'm going to cover a lot of those commonly asked questions about this thing and kind of just go in depth as possible. As much in depth as possible as I can. This is probably going to be a short video. The great thing about this strategy is that it's extremely simple. It's very beginner friendly. It is very easy to spot setups, and it has a very high win rate. The only downsides I would say to this trade is that you are going to be in trades probably for longer than you're used to. If you're used to trading on the smaller time frames, this strategy is going to be taking place on the 5-minute time frame where you're going to be taking your entries, and you are also going to be playing in the direction of the trend on the 15-minute chart. So if you're used to 1-minute scalping, 2-minute scalping, even trading on the 3-minute, you're probably used to being in trades for maybe 5 to 10 minutes. I've had trades with this strategy that have lasted a couple of hours. So your mind definitely needs to be psychologically sharp in order to see success with this strategy. If you want to successfully use this, you need to be in a position mentally where you are able to set your orders and kind of just go about your day. And just once you get a notification on your phone, then you go in and you modify the position. That doesn't always happen where trades last that long, but it definitely happens enough where you need to be comfortable with doing that. I personally used to not be able to do it, but as of recently, I really have. And yeah, with that being said, let's just jump straight into it. I also want to show you guys exactly how to set up this indicator. A lot of people are asking just a lot of questions in general that were being asked about it. So first things first, you're going to want to pull up two charts on Trade8. Both are going to be NQ, which is what we trade. I mean, I'm sure this probably works on ES. This is just pure price action reading, so I would assume that this works in probably any session and on anything that you want, but I have only tested it and used it trading NQ during NYSE session, which is at 9:30 a.m. Eastern every weekday. Anyway, you want two charts. In order to do that on your Trade8, sorry, not on your Trade8, on your trading view, you come up here, click on this button, and then you click right here. This is going to give you an option to have two charts open. You can drag the middle and how big you want them. I only have I have the 5-minute taking up the majority of my screen. On the left-hand side is going to be the 5-minute. On the right-hand side is going to be the 15-minute. Obviously, that's all preference, how you want to set it up, but that's what I do. Your 15-minute chart, you're going to want to have the 21 and the 50 EMA. Easiest way to do this is if you go to indicators, the exact one that I have, if you type in TEMA Advent, it's this one, this indicator right here. When you actually go ahead and apply it, it's going to actually show 3 lines like this. So you're going to have a red, a green, and a blue one. What you're going to want to do is come up here, click on this settings, uncheck that blue one. Then you're going to want to go into inputs. And then the first and the second one are the ones that you need to change. So you need to make sure that this first number is 21 and this second one is 50, and make sure you have those, just those two ones on. So in my case, the red one is the 21 EMA and the green one is the 50 EMA. If you don't know what an EMA is, it's basically an average price of however many days you select. So at this point in time, the average price of NQ over the last 21 days is 20,831.4, roughly. The 50 EMA, which is the green one, would be the average price of NQ over the last 50 days, which at the moment that I'm recording this is right here. You can see 20,749 roughly, right? So that's all an EMA is. This helps us to identify trend more easily and give us our bias more easily. So this strategy is extremely simple, and it is the most effective when you are trading. Your position size is a multiple of 5. So ideally you want to be trading micros, and you want to be trading your position size ideally wants to be a multiple of 5. 5, 10, 15, 20, so on. Now, the reason that this is the most ideal is because we are going to be having 3 take profit levels. So, and the way that we trim is, let's say, for example, that I just got into a long right here. like this. This would be my entry, say right here. And say we have 3 TPs. This is the first TP, this is the second TP, this is the third TP. At the first TP, take profit, we would take off 40, ideally we want to take off 40% of our position. At the second TP, we want to take off another 40% of our position. And then at the final TP, we want to sell that remainder of the position, which would be the last 20%. Now, you can only do trim in this manner if your contracts are in a multiple of 5. If you are trading 5 contracts, you would trim 2, 2, and 1. That would be 40%, 40%, 20%. If you were trading 10 contracts, that would obviously be 4, 4, and then 2, and so on. Every multiple of 5 is going to make this a lot easier. So what I would recommend if you are really looking to trade with this strategy is get on an account size of $100,000 or bigger. 50K is just a little bit too small for my liking, and I'm gonna go over why in just a second. There's also 2 more rules that I should note. I guess, you know what, we'll actually get into that, but later on. It'll be easier to explain as I explain how to find entries and stuff like that. But pretty much that's the whole premise. I would recommend for this strategy, in a nutshell, $100,000 funded account or larger. I know a lot of you guys like 50Ks. I personally trade this account or this strat on 50Ks and it works. However, I would recommend definitely having a 100K or larger. So I'm going to replay to Monday, and I'm pretty much just going to show you guys how you actually go ahead and find an entry on this with this strat. This week, like I said, was one of my best weeks. Actually, was my best week ever. I also had my best day ever. So there's a couple more rules that I should quickly mention. First things first, you are going to be trading from 9:30 a.m. Eastern to 11:30 a.m. Eastern every morning. So you have a 2-hour window to find a trade. You are going to be taking 2 trades max per day. Win both, lose both. If you only get one setup, then you only get one setup. But you are going to always look for 2 trades per day. So I'll go ahead and write this down for you guys. All right. So the rules are 2 trades per day. 1 is fine. If you just get 1 setup, 1 is fine. But 2 trades per day, no more. Right? It can be less, but no more. Next, you are going to wait until 9:45 a.m. to execute an entry, I guess I should say. Okay, what else did I say? Oh, yeah. We're going to be playing with the trend of the 15-minute over here on the right-hand side of our screen. And we are also going to only take a trade if the stop loss is less than 100 points. There is a rule for your stop loss, or your position sizing, I should say, relative to your stop loss. If your stop loss is anywhere between 1 to 50 points, your stop or your position size is going to be full. Okay, in this case, we're going to say that on a 100K account, we're trading 10 micros per trade, right? Or let's just say, I'll use my 300K account as an example. I really like the 300K account with this strategy. So I'm trading this strategy specifically on a 300K account right now. My position size is 20 micros on my 300K account. Any stop loss that is between 1 and 50 points, I'm going to trade my full position size, which in my case would be 20 micros. Any stop loss that is greater than 50 points, or here, I'll say if our stop loss is greater than 50 points, we are going to be sized half. We'll say half size. And then I'll just write stop loss is less than 50 points. That is going to be full position size. Okay, so for my example's sake, I'm going to be trading on my 300K account, I'm going to be trading 20 micros per trade. That's if my stop loss is less than 50 points. If my stop loss is greater than 50 points, I am going to be trading 10 micros. I'll leave this up on here for the screen. I'll leave this up here on the screen for you guys to look at and write down. And the reason that I was saying that this is kind of iffy on a 50K account is because I don't think that you should be going in to a trade with any more than 5 micros per trade on a 50K account anyway. And if you were going to be half size, you can't half size 5 micros, right? 5 is not divisible by 2, therefore you cannot half size 5. What I have been doing is sizing down to 3, but the problem is when you size down to 3 contracts, what I was explaining earlier, the way that we take our profits is the first profit we sell 40%, second take profit, we sell another 40%, and then the all out position, we sell the rest, which is going to be that 20%. You can do that with 5 contracts. You can trim 40%, 40%, 20%, but with 3 contracts, you can't. You are forced to do 33%, 33%, 33%, which is what I do. I just do when I quote half size on my 50K account, I'm just trimming 1, 1, and 1, as opposed to 2, 2, and 1, which is that 40%, 40%, 20%. I'm now actually, when I'm half size on the 50K account, I'm now technically trimming 33%, 33%, 33%, right? Which can kind of skew the results a little bit, which is why I recommend getting on an account, honestly, 150K or greater. I would recommend any account where you can have your full position size be at least 10 micros, so that your half position size can be 5, so that you can relatively keep that 40%, 40%, 20% trimming rule. So with that being said, let's just get straight into this thing. First thing we are going to be looking for is identifying the trend. So coming into market open, the first thing I'm going to do is identify what kind of trend we're in, right? We always want to be playing with the trend of the 15-minute time frame, as I wrote right here. So our first things first, I'm going to identify what kind of trend we're in. You are either going to be bearish or bullish. In this case right here, I can already tell you that we are bearish. Now, the reason is because, 1, we are below our EMAs. Now, this is where our EMAs come into place. When looking for a trade, you are only going to be taking a short setup if price is below the EMAs, and you are only going to be taking a long setup if price is above the EMAs. There are some little things that I have to go over, so don't just take that at face value. But generally speaking, you will only be looking for shorts, or you will only be actually executing a short entry if you are below the EMAs, and you will only be executing a long entry if you are above them. In this case, I'm looking at this right now, and I can tell you that we are bearish. 1, we are below these EMAs, as you can see right here. That's very obvious. We also have wicked below a previous low on the 15-minute, which is right here. Now, a lot of people like to wait for closes above or below areas in order to get quote unquote confirmation for their bias. However, with this strategy, a wick is totally fine. So you can see that we wicked below this previous low. So in this case, as of right now, right before market's about to open, we have a bearish bias. We're below those EMAs. So I am looking to take a short entry. Next rule is we're going to wait till 9:45 to execute an entry. So you're going to let the first 15-minute candle play out, I believe, because... yeah, so we're not going to take a trade on this candle because that's the first candle. Okay, we're not going to take a trade on that candle. Once again, we're waiting for 9:45. Okay, boom. Price goes ahead, and now it's 9:45. Now you can see, you can actually take a, just going forward, guys, this was a question that was very commonly asked. You can take a trade on this candle right here, right? This candle, you can see at the bottom of my screen that it says 9:40 a.m. However, you have to think about it like this. We're waiting until 9:45 to take a trade, right? This candle, just because that says 9:40 down there, that means that this candle opened at 9:40 a.m. We're on the 5-minute time frame, so this candle closed at 9:45, meaning that we can take a trade upon the close of the 9:40 a.m. open candle. I hope that makes sense. There wouldn't be a setup here. There would not be a setup here. I'm going to tell you guys exactly how to spot now the setup. Now, the setup, I'm going to move this. We're going to type here. Okay, so we went over the rules. Here's the setup. First things first is to identify your bias, which we already did. We said we were short. Your next thing is you're going to wait for a candle close in the opposite direction. We're going to call this a pullback candle. So first thing you're going to look for is a pullback candle. So in our case right now, this is going to be our pullback candle. Why? We have a bearish bias, as I explained just a second ago. We then have this pullback candle, which is a candle close in the... I guess I might have to make this smaller. Okay, I'm not going to type that out, but a pullback candle is defined as a candle close in the opposite direction of our bias. So we have a short bias. We're looking for a green candle close to identify as our pullback candle. So that right there is our quote-unquote pullback candle. Next, we are waiting for the next two candles after the pullback candle to look on the 5-minute to be very bearish. Now, we define very bearish as usually things that we're looking for mainly are big top wicks, small bottom wicks, and big bodies. Those are mainly the things, or like full bodies. We're also looking for engulfings. There's a handful of different things that you can identify as a bearish candle. Pretty much all we're doing with this strat is reading price action. So the next two candles, we are just looking for, I'll just say we're looking for bearish confirmation. So we get our pullback candle right here. Now we are looking for our next two candles on the 5-minute chart to give us some sort of bearish confirmation, right? All right, next candle, boom, right there, that's bearish confirmation. Why? Well, you can see, one, we pretty much almost engulfed this white body right here with this red candle. Not technically we didn't, because it was just a little higher right here, but we basically almost did, right? What else do you notice? We have this top wick right here that is going to be 18 points, and we have a bottom wick right here that is about 14.5 points, meaning that our top wick is bigger than our bottom wick. Right here, this shows me that we got a setup right here, okay? The next two candles, remember, we get that pullback candle, and then we're looking for the next two candles to give us that bearish confirmation. Boom, we get it right there. We're going to take our entry right there. What else happens as well? We're below those EMAs. We had on the 15, we had that bearish bias. Everything adds up. Perfect. This is an A+ setup. What I'm going to do is grab my Fibonacci tool. I'm going to hold control on my keyboard, and I'm going to, this just makes it, if you hold control on your keyboard, I talked about this in one of my recaps, but it just makes it so that your cursor snaps to the candles. It makes it a lot easier to place. What I'm going to do is go ahead and hold control, click on right here, drag my Fibonacci up to this previous high. which is going to be our stop loss. And then my TPs are automatically drawn out for me from the Fibonacci. Now, the Fibonacci we don't actually use for the Fibonacci levels. This is just so I can quickly find my take profit levels and set my orders on my TradeAvate account after executing this trade. So upon the close of this candle, we're going to fill, ideally, we're going to fill exactly right here. Your fill probably will fluctuate by a point or two, as long as it's not, you know, a crazy difference. That's totally fine. In order to get your Fibonacci settings like this, your Fibonacci levels by default are not going to look like this. If you don't have the Fibonacci, I believe that it is right here. Yeah. Third one down, boom, fib retracement. That's what you want. If you just favorite it, it'll go in your box up here. The settings for the Fibonacci are this. You want to check off 0, 1, 2, 3, and 4. The other ones that are checked off by default, just uncheck those and make sure just copy these. Also you can do extend lines right here to make it look like that. You can make it whatever colors that you like. I just have it as the default. Now, our stop loss is always going to be placed at the high or low. In our case, this is a high that was formed upon the pullback candle. So right here we had, it's just going to be placed right up here, right? Now, it's not actually going to, I say pullback candle, but I mean the high that was created kind of prior, right before our setup, I should say. Not actually on the high of the pullback candle itself, on the high of the actual, you know, basically where our setup was formed. So in our case, it's going to be right at the top of this wick of this candle, right? So boom, I fill here. Next thing I do is go on over to my TradeAvate on my other monitor. I set all my orders up. Right, in this case, my stop loss is 45 points. So on this trade, once again, we are going to be full position size since this stop loss is less than 50 points. So on my 300K account, I'm going to be going in this thing with, once again, like I said earlier, 20 micro contracts, right? Whatever. I end up filling. I go onto my TradeAvate account. I set my stop loss for 20 contracts at right here, 79 or 729.75. And then I set my orders at my TP. So once again, it's going to be 40% here, 40% here, and then 20% here, right? So with 20 contracts, that would be 8 contracts, 8 contracts, and 4 contracts. So I set my stop loss here. I set an order for 8 here. I set an order for 8 here. And then I set an order for the remaining 4 right here. Then we're in, and we just let this thing play out. Okay, TP. Okay, hold on. Let's not get too far ahead of ourselves. There's something I need to go over. Right here, TP1 hits. Okay, great. Order filled. We just caught 40 points. We are now out 40% of our position. What happens after we hit take profit number 1? Well, we're going to delete our stop loss up here at this high where we originally had it. So I'm going to go on over my other monitor. I'm going to delete my stop loss that was right up here at this high. And I'm now going to move my stop loss of the remainder of the position to my break even or my entry level, which is going to be right here at 21,684.5. At this point in time, I would have 60% of my position left because I trimmed 40 here on the 300K account with 20K or with 20 contracts. That would be 8, meaning I have 12 contracts left. So boom, I set my stop loss right here at my break even point for 12 contracts. And then I still have my other 2 take profit orders set. All right, great. We just caught 45 points. Boom, next take profit hits right here. I just sold another 40% of my position right there. Now what do we do? Well, now I sold 16 contracts total because I sold 8 here, and then I sold another 8 here. So now I have 4 left out of those 20, right? So now what I'm going to do is take my stop loss from up here. I'm going to go on my other monitor again, delete my stop loss from up here. Now I'm going to make a new stop order at my first take profit, which is going to be 639.25 for the remainder of my position, which is going to be that 20%, or in my case with 20 contracts, that would be 4 contracts, right? Because I sold 8 here. I sold 8 here. That's 16, 20 minus 16. That means I have 4 left. I'm going to put my stop order for 4 contracts right here at my first take profit. Now, this means that if I am to get, quote, stopped out of this trade from here on out, I'm going to be stopped in profit, and I'm banking. At this point, I'm fucking jumping up and down in my seat, and I'm like screaming because we are up now over 90 points on this trade, right? And then I have the remainder of my position right here. So I have a 4 order stop loss set right here, and then I have a 4 contract order take profit set right here at my all out, which is going to be the remainder of my position. We'll see what happens. We end up hitting full take profit right there. And that is going to be a, drumroll please, 135 point dub on a fucking no news Monday. Absolutely insane. We get rid of our last 4 contracts there, or the remaining 20% of your position, depending on however many contracts you're trading. The remaining 20% of your position. Congratulations, you just hit take full TP. However, we are still looking for another trade. Why? Our rules say 2 trades per day. 2 trades per day no matter what. It doesn't matter if the first trade is a huge dub, we're still going to look for that second one. All right, so great. We hit that. Great. Now we are still having a bearish bias. I hope it's obvious to you guys why that is. We are, again, still below the EMAs here on the 15. Obviously, we are just very bearish. Now, what are we looking for again to get our setup? We're looking for a pullback candle. So we're going to wait for a green candle close. We got one right there. Now we're still looking for some shorts. Let's see if we can get a nice bearish confirmation out of these ones. Bang, we get one right here. Now, this candle isn't engulfing, right? As this one was. However, the top wick, this is a pretty big body, right? The top wick also is about 14 points, and this bottom wick is going to be about 10 points. So our top wick, once again, was bigger than our bottom wick. And in this downtrend and how big this body is, this is enough of a bearish confirmation for me to enter shorts. So same thing I'm going to do. I'm going to grab my fib, hold control on my keyboard, or command if you're on Mac, I believe. Go right here. We're going to fill there on our trade of 8. Or if you have your, things linked, whatever, you're going to fill right here. Stop loss is going to go right above here. Once again, pretty much you can see how it's pretty much the same exact setup as right here, right? We get this pullback candle. Now we're looking for bearish confirmation. Boom, we get it right there. Stop loss goes above the high. In this case, this is a 56-point stop loss. So in this case, I am going now to trade 10 contracts instead of 20 contracts on this trade, since my stop loss is over 50 points, as we talked about earlier in the rules. And then let's see what happens. Once again, stop loss here. Orders for 40%, 40%, 20%, which in my case with 10 contracts on this trade, once again, because our stop loss is over 50 points and we are half sized, is 4 contracts, and then 2. Let's see what happens. We're in a little bit of drawdown. Take profit 1 ends up getting hit. After take profit 1 ends up getting hit, we move our stop loss to break even. And then we end up getting stopped out at break even. So we take a small dub there. We took about a 4 micro contract dub on 56 points. So not nearly as much as we made on that first trade, but on this day, we went 2 for 2 and we caught over 185 points. Yeah, about 185, 190 points on this day that we caught, and just absolutely incredible. You can see how just crazy that trade was. Let's say you were to miss this entry, right? Let's say you were to miss this entry for whatever reason. We get another pullback candle right here, and then this candle right here. Holy shit, I'm taking shorts off of that. That is extremely bearish. Look at how much we engulfed it. Yeah, the bottom wick is a little bigger than the top wick, but this is pretty much a full body red close also engulfing. So I'm going to take my entry right here. Stop loss is going to be right there. Even if you missed this first entry and then took this here, you still would have got filled here, hit take profit 1, and then stopped out at break even. So yeah, guys, that's, it's extremely simple. I'm going to back test one more day for you guys, just so that you can continue to see it a little easier. Or not really see it a little easier, I guess. Just so you guys can, see. I'll go over one more trading day. And guys, we had an undefeated week this week. This strat so far for me has shown me over an 80% win rate. And it's been working extremely well. So hopefully that can continue on. And our market open is going to be right there. All right, we'll bring our rules and our setup over here again, just so for everyone to refer back to. All right, first things first, coming into market open, we're going to look for our bias. So I always like to make these red lines once again, 9:30 to 11:30. I should write that in the rules. Okay, 2 trades per day or until 11:30 a.m. Eastern. So it's again, it's a 2-hour window. We're going to go ahead, look on the 15-minute and look for our bias. We are going to be short. We're going to have a short bias. Again, I can already tell why. One, we're below the EMAs, and we also had this low right here that we wicked below. We are also bearish, pretty much almost identical to the last day that we just backtested. Once again, we're going to wait till 9:45. Okay, boom, this right here. Like I was explaining before, you can take a trade on this candle because this candle, even though it says 9:40, this candle opened at 9:40 and then closed at 9:45, which is when we went to take a trade. So you can take a trade upon the close of this candle, which we absolutely did on this day. We had this pullback candle right here, which is, once again, a candle that closes in the opposite direction of your bias. So green candle close. Boom. Huge engulfing. Extremely bearish. Not much else to say. Right? Well, entry right here. Stop loss is going to be right there at the high that we created upon this, right before we took the entry. This stop loss, make sure always double check your stop loss is less than 100 points. It is. In our case, this is an 83-point SL. That means our stop loss is greater than 50 points. So on this trade specifically, we are going to be half size. So I'm going to be going in this trade with 10 contracts as opposed to my usual full size of 20. And the same thing. We let it play out. Boom, take profit gets hit. What do we do? Hopefully you already said we move our stop loss from here to here, which is going to be our break even. We end up hitting take profit 2 right there. After we hit take profit 2, we move our stop loss from here to here. Now we are guaranteed profit even if we are to get stopped out on this trade. And then we end up hitting full take profit on this thing. I mean, guys, I will say this last week was definitely abnormal. I have not seen the market dump this much in a while, just repeatedly. And look, just for the example's sake, let's say that you missed this first setup for whatever reason. If you were to take it right here, right, pullback candle, close green right here, and then this candle extremely bearish, we'll take an entry right there. You would have hit first TP right there. Then you would have got stop break even. And then let's just say, so you still would have taken a dub on that. Let's say you missed this one for whatever reason. And then you got filled right here. You would have hit take profit 1 and then got stopped out at break even. So literally there was 3 entries on this day where you could have taken a trade. I'm going to see, was there a second entry for me on this day? I don't remember. Okay, so we ended up hitting full take profit here. Yeah, okay, so we got out of this trade right here when we hit full take profit. So now from there on out, we're looking for yet another setup. Once again, we are still bearish just because we are below those EMAs still, and then we're still, in this pretty fat downtrend. All right, so let's look for another setup. Okay, so we got out of this trade right here. So let's look for another setup. We're waiting for a green candle. Okay, we get a pullback there. Let's see if for the next 2 candles can give us some bearish confirmation. Nope. Now, that's a red close, but look how big that bottom wick is. That's a pretty fat bottom wick. That's showing me that buyers are still kind of here to play, and I don't want to mess with them right now, so I'm not going to take that entry. And it's a good thing I didn't because I would have got stopped out right there. Anyway, we get some more green candles. Let's see if we can get a nice bearish confirmation. Right there, bang. I actually took this trade. I remember it. Stop loss right there. Check the stop loss size. It's a 55-point SL, so just over 50 points. Still going to have size. So going in on this one with 10 cons. We ended up hitting take profit 1 and then getting stop break even, I believe. Oh, actually, nope. We ended up, we hit take profit 2 on this one and then got stopped out in profit at take profit 1. So this was another banger day. Another absolutely just freaking banger day on this one. And that's it. Obviously, it's going to be the opposite for a long setup. If you're looking for longs, if your 15-minute is above the EMAs and you are bullish on the 15-minute and you have a long bias, you're going to wait for a red candle close as your pullback candle and then green bullish confirmation within the next 2 5-minute candles out of it. What I will say is for the trend, I'm just going to, okay, right here. Now I want you guys to look at the 15-minute. Now I know we're past 11:30, but I just want to show you guys something to help explain the trend and finding your bias. This was our previous high right here on the 15-minute, right? As soon as we wicked above this, we actually would flip to a long bias. However, we wouldn't actually execute a trade because we were still below those EMAs. So right here, obviously I already took 2 trades and it's past 11:30, but just for the example's sake, say that this was, in the actual your right time slot. Right here, I actually would be bullish and looking for a long setup, but I would not actually execute a long entry until the 15-minute was able to push significantly above these EMAs, right? We only want to take a trade if it is, for longs, if we're, a pretty decent amount above the EMAs, and for shorts, if we're a pretty decent amount below them, right? Biggest thing that Habibi and I found when we were testing this strategy was that any trade that we took where price on the 15-minute was kind of chopping around the EMAs, we would get faked out a lot of, and putting these EMAs here really helped us to stop from getting faked out of a lot of trades that we were getting stopped out on, which is the ones that would be, when we look back on it, we're just chopping around in these EMAs in this area. So even though right here I am bullish, I'm still not looking to actually execute a long setup because we're below those EMAs. I'm also not looking to take a short setup now because we flipped to the buy side, or to a bullish bias. So at this point in time, I wouldn't be looking for anything until the 15-minute either pushed well above our EMAs or we broke down below this low and then reconfirmed a bearish bias. Hopefully that makes sense. That's about the best way I can explain it. But yeah, guys, that is pretty much going to wrap it up. This is an extremely simple strategy, extremely simple. I tried to water it down and make it as easy to understand as possible. But as always, if you guys have any questions, feel free to comment. At me in the Discord or DM me on Discord is always going to be the best way to reach me, though, because I spend the most time on there. So make sure to do that. If you have any questions, DM me, at me in chat. I am more than happy to help you out if you need clarification on anything. And yeah, guys, this is the trading strategy that has allowed me to have my best trading day and my best trading week ever in my 2.5 years of day trading. It is an extremely simple model, very, very specific on what to look for to actually execute an entry. So you're never going to be kind of questioning a setup. It's very, okay, yeah, that's a setup, or okay, that's not a setup, right? Which is one thing I really like about it. But with that being said, that's going to wrap up this video. I hope you guys learned something from it. Make sure to subscribe to me. And yeah, let's keep just fucking killing it. Yeah. Peace out.